Let's start the video by watching the pre-market analysis that I recorded.
If this becomes a classic sell day, then I don't want opening range gap CA to be traded at 9:30. 9:30 opens, trades higher, pairs to trade till 9:30 opening range gap, consequent encroachment, fails to take out this low, that is pre-market high, whereas ES takes this low, takes this high, we form an SMT, and then price continues pulling lower, at least till these levels. Reminding myself that trading every day is not necessary. Find reasons to not take a trade rather than take a trade. Protect your capital and your confidence. I'm pausing the video here at 9:26.
This is the journal entry for January 14th, 2026. Coming into the market, my bias was depending on how 9:30 reacts. I had two plans in position here, as you can see my Obsidian pre-market analysis journal. After midnight open, price has been trading lower. We haven't seen any significant manipulation above 8:30 nor midnight open. This is a sign of classic sell day. If this profile is being played, I don't want the opening range gap CA to be traded, or at least bodies respecting the same, and the DOL drawn liquidity for that would be the sell side mark lower. However, my second analysis was if price opens at 9:30, trades lower, takes these lows and shows signs of displacement, then that profile would be New York reversal profile. And generally in New York reversal profile, my drawn liquidity is London session highs. So let's see how market played out today. On Tuesday, January 13th, we trade higher, take out the previous day highs and close below the Monday's closing price. It dropped down to 4-hour type web. Price after taking the previous day high closes below this candle, and this becomes the order block for the upcoming move. So from here, if price is really bearish, it should start respecting the up close candles, that is the order blocks. Price at 2 o'clock finally closes below this 4-hour CB and this, and forms this order block. So now ideally if price wants to trade to these lows, it should trade higher, open at 6 a.m. The 6 a.m. candle should open, trade higher and then lower. So let's drop down to 15-minute time frame. This is 15-minute chart. We have 8:30 PPI news today. It trades the wick as a mitigation block and closes below the 8 a.m. candle. So what does this confirm? That price is heavy. It does not even want to trade till CE of the 4-hour CB. Price is not willing to close above the 4 or even touch the consequent encroachment of this 4-hour CB. This suggests is that price is really heavy to go towards this this sell side liquidity. This is the CB that I have marked. Price has been constantly referring to this CB. For 3 times it was referring to that CB and finally it closes below that. So this pair with heavy displacement and price unable to trade even above previous day low confirms that we are in a sell side of the curve. When we were here, there were 2 possibilities that I was thinking of. 9:30 opens lower, directly takes this sell side, and then we form the New York reversal profile targeting this London highs, or price open, trades higher into this order block and then trades lower. Also, I was not anticipating this high to be taken because this high is formed inside of a fair value gap or a CB. Any high is formed inside of a fair value gap. That high is an intermediate term high and ideally it should stay protected. This is the 1-minute chart. Price opens at 9:30, trades lower and immediately reverses and hunts this stop losses and trades into this CB. After this, price immediately reverses and forms another CB here. So what I was anticipating is price to not trade even till the consequent encroachment of this bearish fair value gap. When price trades in this CB and closes below this candle, this confirms to be the order block. At the same time, we are closing below the 9:30 first presented FVG. This inverses it completely. We have drawn liquidity on the lower side. Bodies are clearly respecting it. Price fails to reach till consequent encroachment of that. This confirms the narrative for the lower prices. My target was this sell side. Price immediately takes it. What is the observation for today? When I was placing my order here, I was slightly nervous. I don't know the exact reason why I felt nervous here. And as soon as price started pulling lower towards my target, I felt the urge to book it before hitting the targets. I closed my profits 7 points before the drawn liquidity. For most of the trade, behavior was steady and price moved smoothly there was no need to manage this trade aggressively. So the insights that I have gained today is that when bias and narrative is very clear, pair that with a well-defined pre-market plan, the execution becomes very smoother and you start trusting your setup and the process. Going forward, the only adjustment that I need is to not rushing into taking profits and stay confident with prawn liquidity that I have marked. Else, I can take a partial and let remaining quantity run towards the anticipated target. Overall, this was a good process day. The plan was followed almost exactly, and the early exit is only a fine tuning point rather than a flaw. So small such refinements matter more than big changes. And that is what I'm trying to achieve by taking one trade at a time. Thank you.